Good morning, traders. Welcome to the TMT Daily Strategy video for Thursday, July 12th. Just a quick admin note, two things. One is for those of you who are in coaching, we're going to put a schedule up for next week. We're going to start it up again, and just look for your email through in support, or if you have a date of preference that and time, of course, that you want to schedule your coaching, just please let us know at support@tradingmarkettechnicals.com, as well as for those of you who are testing the algorithm that goes onto your computer. Just let us know if you have any questions. Doing very, very well at the moment. I know I had put out, if you guys wanted to sample it, just give us a quick shout out at support@tradingmarkettechnicals.com. There was a delay on a bunch of requests, only because we got into the holiday and I was away. So I'm getting back to those requests. Just send me another request if I didn't reach out to you, and may have gotten lost in the shuffle. So I do apologize. But remember, coaching and the algo, if you guys are in that, please send us an email at support so we can get you scheduled. Okay. So yesterday, as you know, we had the trade tariff debacle, and the market sold off. But the market sold off. Obviously, it was right at 6 o'clock, right on the nose when they opened up. Actually, it was like 4:30 on I think it was Tuesday night, and then really they sold off overnight, jumped on the opening to the downside, and then it really went sideways, backing, filling. It was really not much to do. What was the big picture was gold and crude oil, which, as you know, we're all over that. And some of you did fantastic in gold, in crude oil for that matter. And gold is approaching our first buy-in of the 1245, 1240-ish area. Some of you have started that, I know that, as well as myself. And crude oil, you guys took a couple of day trades. I did not, but I am now looking for it, and we're going to reference where we're going to be looking for the new sell area. Now, and we talked about the crude oil, how everything is lining up. I did get a couple of fun emails. Well, thank you very much. That, how'd you figure out that you really don't know right off the bat, but you know that something's brewing when the commitment to trade reports show that now where the producers are heavily short. I mean, short that the most they've ever been all of 2018 and pretty much 17. You knew something's up. And remember, that doesn't mean that oil's just going to go right now to $55. No, it's going to back and fill a little bit, and that's what it does. Just like gold, it takes all the weak longs out, the weak shorts out, if you're going the other way, obviously, and then it resumes its trend. So that's something that we're going to be paying attention to, because that's going to be the big money maker in a lot of these oil stocks and ETFs. All right, so we have the VXX. You can see that there was no movement in the S&P other than the big down move. And what is this telling us? That's telling us that, you know what, we could see some further upside, like I anticipate, to get those gaps that are filled up higher. So right now, I want to see this back down below this. Otherwise, I'm not going to touch this. I want to see below. I want it in the 29 handle, and then 29 all the way into 25, 26. And if it breaks 30, I think it starts to get going a little bit further, where we can start dollar cost averaging a long trade in VXX. Next is going to be the transports. I mean, really, transports got bamboozled yesterday. There's no question about it. Bamboozled. And the transports, you can see now clinging to the 200-day moving average. Not a good sign if you're a bull and you expect a continuation of this bull market. I think it's going to be a one and done. I think you're going to get a big pop up. We break up through and then fail in the equity market. So, and again, that's just my anticipation on my technical view. Everything happens differently and changes right away. So don't anticipate it, but don't make the move like it's going to happen. You got to wait for price to confirm everything. So not a good sign. And also, I'd like to see higher prices in equity markets, so we can start a move higher. Now remember, tomorrow is the banks. All right, Wells Fargo, PNC, JP Morgan starts the three big banks. Let's start watching that XLF. If you remember, let me just bring this XLF out here. We have the XLF here, and it really didn't do anything yesterday. So it's really it's dead money until tomorrow. I would not be long or short XLF or any banks. It's just basically going to the casino. Wait, let's see what happens. Let's see what their guidance is, and then we could start figuring out, okay, well, if the banks start to rally, the market's going to rally, right? So that's why I would have a nice clean book. I would not be taking long position, short position until after what the banks do. That would probably give us a good scenario of an established trend. And I think I think that does happen, and the banks start to rally, which I would like to see the banks rally, because right now they're at a key and pivotal area where they're at their lows for 2018. we can get we can start to build a nice long trade, and also anticipate some further upside in the equity markets. Right? But right now, transport's just letting you know they're not really doing too well. But you can see here, we're just trying to get positive in the MACD, and RSI is already positive on buy signals. Yes. Now this is this morning, okay? This is the 12th in the morning, this green candle. This was yesterday. As you can see, we gapped down, right? We're already filling the gap already. Okay, so that gap is already filled. That's done, just like we did here. This is done. So we have another gap just above it now that needs to get filled down below. So maybe we go one more time back down. We test 2750, 2740, and then one more time back up, and I think that should solidify it. We can go back and forth, guys, for many, many days and weeks before we start to really break down, which I would anticipate a further upside move. All right, fill these gaps, even go higher, make new all-time highs, fail, and then that would give us a choppy session, something like this, like we go for 2 or 3 weeks. That'll get us into August, and sometime August through October, where we get the end of the summer, where we would get that gap fill, and then we would start looking for that correction. All right. Next is going to be the YM. Same thing. We got the one big gap way up in here, and we have resistance that are coming in at the 24,841. That's going to be for today's trade. NQ. NQ was absolutely the strongest out of all of them yesterday. But however, I do think that technology is going to be the first one that's going to take it on the chin. Now, on the trade tariffs, there was nothing really big as far as technology is concerned, but I do think that it's going to be one of the hard hits when we start to roll over again. All right, next is going to be the Qs, and you can see up in here 176.79. That needs to get taken out for further upside. Remember, guys, if we take this 176.79, that's why you should write them down on your charts, or at least plant lines on them. And take that area out, that becomes support, right? So we have resistance right now, but that becomes support. Just like the 171.19, if that breaks down, that becomes resistance. And right now it is support. We have a big area of support here. We're way away, so this is just off the daily, but these are key and pivotal areas that you need to write down on your charts, okay? Very important, but right now 176.79 comes into play for resistance. And we got the spiders up in here. Remember we talked about, right? Double top. When we get a double top, we have to sell the double top. We have to look for a sell trigger, but we have to sell it. So, nice little day if you were short, and we've been talking about the double top. So now let's see if we can get back into that double top, fail again, and we look for a sell signal. If we break through the double top, what are we looking for? We're going to be looking for a long, right? Because we should be out of that opening range where now we have new order flow coming in, new algos, HFTs come in, and start to buy the market up. IWM. Okay, double top. We still have that nice big bearish rising wedge. The pattern is still 158, and the pattern is still legit. So there's nothing wrong with this pattern. Again, you would have been stopped out because you want to obviously, if you're short, you want to follow your stops. You would have got stopped out for a profit, obviously. However, if you are not out, you should be out if you break the highs here. Okay, but you really should have gotten out a while ago. But again, 158 is the true target. So if you're looking for that area, that's the area to be looking for the profit area. Okay, now I want to talk about the dollar. We got a lot to talk about gold and crude oil. Dollar held at 24.92. Again, this is the dollar ETF. You can look at the DXY, which is the dollar index. You can look at the dollar yen even. The dollar yen goes exactly one for one what the dollar index looks for. But if you don't have the feed and you want to just look at the simple ETF, UEP would be fine. I do the research off of this as well. We got some resistance coming up here. We held that 24.92 and we exploded higher. Put a lot of pressure, not only on what was going on with crude oil in Iran, and of course the inventory numbers, which, may I add, I want to talk about that. The biggest draw in since 2015, I believe, or 16. Why did the equity market, why did crude oil sell off? Number one, we're coming into, like I mentioned yesterday, seasonality strength is over. Right after driving season, July 4th, that's where everything ends. Seasonality strength in crude oil, right? We also have Iran issue about Iran coming in. So now that also, we also had production increases from OPEC members in Russia, right? And on top of that, so we get back to, we also have the commitment to trader reports we talked about, right? All of these lined up for a perfect storm for crude oil to roll over. But why did it roll over? We had the largest draw, right? Let me get that over here. The largest draw since 2015. Well, the production of gasoline had increased dramatically. So the production of gasoline draws from the supply of crude oil. So what happens is that now you get that that supposedly, and it's a very big positive, right? Because you want gasoline. You want gasoline to be up because everybody, the consumers, is driving around, going to the beach, doing that. But that was anticipated. So aside from that, the draw, if you take that gasoline product out, that would have never been a big draw in crude. So all of those lined up for the perfect storm for a sell. So we got into that 74 to 76 zone. If you remember, we never got into 76, but we were right here. And sure enough, guys, we popped right on the number, and we started to sell off all day. It was bleeding all day. So now we're at 70, right? And this is this morning's little candle. Caught the 21 EMA. 50% of that candle, the next area, 72 and change, we start looking for a sell signal in crude oil, which would give us a sell signal in our ETFs and oil stocks, all right? So we want to start looking for the weakest of the bunch, and I will provide that to you. Now, one day doesn't make a trend, so that's why I'm not showing you the oil stocks, but start doing some homework. Start looking for the oil stocks, the COPs, the CVXs, the Exxon. You could do a lot of the producers, they get hit hardest the first. SLB, EOG, Halliburton, Baker Hughes, GE. So take a look at those. But again, I will provide you with some great charts when we start to get through this week. I think we need to see some movement to the upside. Look to an area where we start shorting, which will be that $72 area, and then we'll start looking to short some of these oil stocks. So great trade, and this is why now we're looking for, because we do get the bounce and we get the dump. I think we should see at least $66, if not in the low 60 to 200-day moving average. Next is going to be GDX. And what can I say? This is a great pattern. We broke back out. If you remember, I adjusted this, right? I adjusted this pattern and we hit it right down below. We lose 21.68. We should flush all the way down to 21 bucks. All right. I think we'll break out and immediately run back in again. So we get a down day and then we get an up day. That's a very big buy signal for gold. Now, speaking of gold, as you can see here, it has now my reference point of 1240. We got as low as 1243, 1242, I believe, yesterday. And we started adding a little bit here, and many of you guys did as well. We can go as low as 1233, so don't add too much, right? And if you haven't added, wait to see the 1240 hold. If we can get a test of 1240 and hold, that's going to be your cue to buy. If we break 1240, don't buy as of yet. Don't dollar cost average yet. Look for that 1233, 1238 area, okay, in gold. But gold is setting up perfectly for the big move, I believe, coming at the end of this month. We'll probably get some chop down below, and then we'll move higher, we'll fail, we'll move higher, but then we're going to be still in that choppy pattern where we'll start that big rip up right up to that 1373, 1400, and that's what we want to be ready for. Okay. Next is going to be the YM. Here are your levels, 24,925. This is this morning now. This was yesterday. As you can see here, this is the 11th. Right. As you can see, we open lower from Tuesday's night, sideways all day. So that means no opening range break. What do? You do absolutely nothing. There is absolutely no sellers are exhausted and there's no buyers to be had. Okay, this is today. This is this morning. So take these points of reference and put them on your charts for today's trade. ES, same thing. 27,974, 27,86 to 27,84. ES. And these are your reference points from our algo where you can trade off of support and resistance. And then last is going to be the NQ. All right, we'll see what happens, guys, but we're going to get some really good, should be getting busy now, if not today, tomorrow, going into next week, where we get right into the middle of the summer. Remember, those summer doldrums are here. Lack of liquidity, lack of volume is drying up, so those moves will be exaggerated, okay? Have a great day, and we'll see you tomorrow.